What is good, guys? It's Rey-Jay back with another video, and in this one I'm going to be talking about the one and only SPY, the Nasdaq, the QQQs, and the futures. Break down what I do anticipate to happen for tomorrow and how this may affect the overall market, what the data is telling us, and why on earth I do expect some very volatile price action and maybe a possible bull trap going into CPI. Now, before I break anything down about that, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire community as a whole. And the last thing is, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 5 free stocks, each valued at up to $3,000, and you'll also have free level 2 data. The offer ends in just 2 days. Make sure you check it out before they run out. With that out of the way, let's get on with the video. So SPY was up 0.23% for the day, and I do believe it's very likely that the market is going to see downside soon from a technical standpoint. Now, I can't say this with 100% certainty because it also depends on the CPI data that's coming out. I think it's going to be a make or break for the rally. Now, the odds are favoring that the market is going to cool off a bit, but I do want to note something else. Before we do see SPY potentially coming down, we might see this thing trying to push back up one last time, because when you look at the overall setup, we did actually come down to 405, got a nice bounce, and at the last minute, thanks to Max Payne and the options chain, the market makers managed to push SPY up above 408. And they did this, once again, closing it above major resistance, showing that the bulls still have some strength. They are still able to try to push the market up. So just so you guys know, we do have a Fed speaker, I think, before the market opens. Really not too much on Monday, except for the hedging and the battle between big money and the market makers and many institutions. It's going to be very interesting. But Tuesday, before the market opens, is when we have CPI coming out. That's going to be very important. Now, looking at the overall call volume for the CBOE, we could see right now it's at this relatively stable position. It is still relatively high compared to these phases right over here, and we are still seeing high call volume in the markets. But despite that, the put to call ratio is a little bit different because of the big options expiration for Friday. And Max Payne happens to be around 400. Now, this is kind of mixed around because, yes, Max Payne's around 400, incentivizing the market to close around there for SPY by the end of the week. But there are still, if you look at this, there is a balanced amount of calls in the money and out the money. It's closer to being balanced, and there are tons of puts out of the money. So are these institutions going to let them expire that way? Technically, the market makers are incentivized to maybe try to push the market a little bit down to closer to this 400 level, but at the same time, they might not want a whole lot of them to close in the money, so they might not push it down as hard. But big money, the big bears, want the market to come down. They have a lot of money betting on it, right? So we have to be very careful. There's a revised piece of data for CPI that came out. There are actually new models that they're using. I think housing is going to weigh in a lot more. I'm going to break this down in more detail tomorrow, but I just want to note real quick, all right, the revised data. This is actually showing that CPI was a little overestimated for some parts of 2022, like from right here, and then it was kind of understated near the end of 2022. So this is now revising it and showing that inflation was actually higher in December, which means the month over month it's going to be a little bit more difficult for us to beat it. But at the same time, this new revision could even make things higher. So it's like a mix of two different factors, but overall it is still kind of like aiming towards, or at least leaning towards, a higher CPI report. Once again, I will go into more details about this. We did see energy go up. We saw lumber go up, the cost of food. They did go up to some degree. We'll have to wait and see if it's at expectations or above, but it is actually, the odds are actually favoring the odds of it being higher. Now, and that's why there are articles coming out saying the January CPI could be a massive shock to the markets, but always remember that nobody knows and we have to be prepared for anything nonetheless. So now let's talk about SPY. As you can see on SPY, this thing closed at 0.23%. We are on the verge of getting a crossover from the MACD. If you are bullish, All right, you're going to be watching it not just hold above 408, but try to reclaim 410. It's going to try to fight for it. If it breaks this, 412 could come. Now, if you're a bear, you're going to be watching it coming down to 405, breaking below this, coming all the way down to this key demand zone between this 402 to 400 area. Either one of them are possible, but in my opinion, it's very hard to predict because of the market maker battle and because of the fact that we have big bears waiting up top to try shorting it, while some market makers might try to push this thing up. It's like a war between massive institutions. So I can't predict it perfectly, but my guess would be, or at least my rational guess would be, they try to push this thing up a little bit going into CPI in anticipation of some decent news. We might push to about 410, maybe try to get a little higher. And there is a chance this could be a bull trap. So please be very, very careful. All right. Just like what happened during this CPI report, the market came down and then we got this like gap up and then we started coming down after. Right. So please be very, very careful with pieces of news like this. Even the PCE report did cause something very similar in the past. I'm sorry, this is when Powell speaking. I'm referring to the chart like way back here. But it doesn't really matter. The bottom line is these reports will affect how the market ends up moving, whether we continue with these rallies or not. And I just want to note that what really happens depends on CPI. I am anticipating maybe a continuation of upside for the QQQ. It might try to reclaim the 300 level. I think they're going to try to prop this thing up just a little bit, maybe coming back to this 305 area, just in anticipation of CPI. And once again, this could be a bull trap, very possible. For Tesla, this could be like a head and shoulders developing. Maybe we get one last pop up before it continues to see downside. But ultimately, look, even if we do get a push up thanks to CPI, I don't expect it to last. I think Tesla still has some more downside to come. We do have this gap up here around 206, so maybe we could try to get that gap fill. Who knows? Maybe we'll try it before coming back down. Really depends on the news and stuff. Please be ready. On the VIX, I want to note that on the daily, this thing has the breakout. It got a rejection of 22, and it's likely going to come down, maybe get a retest of the wedge and bounce, or it's going to bounce off 20. But either way, I'm trying to tell you, we got the breakout. The VIX is going to likely continue to break out as the days go on. So the odds are favoring the market coming down after CPI. They are favoring that. I'm not guaranteeing it. But going into the future, there is downside to come in the markets. I was talking about a bull trap because, yes, we could push up a little bit approaching CPI, but we are going to likely see downside in the markets. The dollar is already breaking out. It looks pretty strong. It might come down a little bit tomorrow, maybe trade sideways, but then I do expect it to slowly approach the 105 area, once again being bearish for the stock market. Google, in my opinion, looks like it might try to bounce, if anything. We did try to fill this gap here. I don't think we fully filled it. Uh, Actually, I think we may have filled it. But anyways, Google might come down a little, try to get a bit of a bounce and try to get back to that 100 level before it does end up getting a potential rejection. And whether it continues to get this rally and this thing bounces, or if it just continues to collapse and come down, depends heavily on CPI. The same could be said about Amazon. It wants to get back to that 100 level. I think it's going to try to make an attempt to do that on Monday before it continues to pick a direction. Once again, depends on CPI. And then Aapl, we closed above 151. Very interesting stuff. It might try to get to this 152 to 154 zone right here, kind of chop around a bit. And if CPI is a little hot, Aapl is likely going to come all the way down to fill this gap, all the way back to the 140s. All right, so please be very, very cautious during times like these. And with that said, the 10-year Treasury yield continuing to push up, guys. Be careful with this. As this thing pushes up, that's going to increase the odds of more bearish momentum for the stock market. If it keeps going up, if it gets this gap fill, once again, the yields going up like this, the Treasury yields, not the best news for the stock market. I'm anticipating that the stock market might see a small push up on Monday, and then it really is going to depend on CPI. The odds are favoring that it's more likely we're going to start seeing some downside after. Am I guaranteeing it? The answer is no, but I just wanted to note this because if CPI is hot, it's going to shock the whole market. So anyways, I wanted to make this video very blunt and very simple. I want to thank you all so much for listening. Have a great rest of the day. And please have a very awesome weekend. I know it's Super Bowl Sunday. I'm sure a lot of you guys are very excited. Um, Take care, guys. I appreciate all of you. The market to the moon, because the long-term future is still very bright. And peace out.